I'm going to get started. I have a great panel here to answer a very difficult, challenging question. Is it time? Is it time for the standby to stand up and take a dominant role in facilitating secure international trade? So on this panel, it's the Asia Survey. So right now, we are clearly Asia focused here with the Asia Survey with Nazarul from Bangladesh, Ashish from India, and Anna from Georgia, which I've often heard to refer to as the crossroads between Europe and Asia. So you're all very, very welcome. But let's get right to it. I'm going to pick up on something technical. So as we know, Nazrul, Bangladesh is firmly traditional LC territory, the land of the giant LC volumes, issuing more LCs than even China, as we heard from Srinath in the first opening session this morning. However, I understand that is changing and that supply chain finance is taking root in Bangladesh. Supply chain finance, open account, driven predominantly by large anchor importers in the US and Europe who want to move from traditional LCs being cumbersome, troublesome, and looking for alternatives. So as a step, a technical, legal, and operational regulatory step to facilitating this supply chain finance journey, I understand the central bank in Bangladesh took a major step just 1 year ago. It just had its birthday when the central bank issued Foreign Exchange Circular FE 25, permitting open account for exporters. So this is to try to support exporters, but especially exporters of ready-made garments to compete with other low-cost but high-quality producers in Southeast Asia. So Nazrul, kick us off. Tell us more about this foreign exchange circular and what is happening.
Thank you, Bin. You are correct. Correct. As usual, you make it sound more exciting than it feels sitting in Bangladesh. To be precise on the circular, actually, central bank permitted authorized dealer to support their exporter on the open account terms under certain conditions. These conditions are actually payment undertaking or payment coverage required in case of default of the importer on a priority basis. And the second most important is payment undertaking or payment risk coverage may also have early settlement option, that is trade finance opportunity, against the export bills or receivables on a without recourse basis. This circular created a lot of excitement between the exporters and also the trade finance, lot of interest for the trade finance community, particularly ready-made garments of Bangladesh, as you mentioned.
Yeah, Nazrul, it's also very exciting to me, but just to be more precise, you said payment undertaking, okay? Payment undertaking on priority basis in event of default by the import. I have no idea. What does priority basis mean?
Honestly speaking, basically there is no precise definition of priority basis. So at least I can say priority basis means as opposed to a non-priority basis.
Very clever. So priority basis is the opposite of non-priority basis. Well, there's no arguing with that. Okay, moving on to the next question. You mentioned the financing must be on a non-recourse basis for the exporter. Again, what is exactly, because people have different interpretations, what exactly is meant in the circular by export finance on non-recourse basis?
Again, as you mentioned on your question, is actually the word or the term non-recourse basis has variant interpretation across the globe. So since there is no precise definition of non-recourse basis in the circular itself, so again, I want to say a non-recourse basis is opposite of recourse basis.
Well, Nazrul, if you get tired of trade finance, you'll become a really top-class politician, not just in Bangladesh, but anywhere you choose to go. But listen, I understand export factoring can be provided on a payment undertaking or payment risk coverage. So that's correct. Yeah, I've got that right. Yeah. And factoring was the ideal model at the start.
Yeah, you are correct, actually. In the early days, when the circular just arrived, in that time, export factoring was the model that has been actually set up. But funny enough, actually, if you look at the Asia on the export factoring side, I think that this mostly done on a recourse basis.
Oh, okay.
Perhaps I can comment on this, as India has a a successful supply chain finance product, particularly on the export factoring side.
Okay, so if you're talking about export factoring, I guess that the GRIF rules, the general rules for international factoring of the FCI, Factors Chain International apply. Was that envisaged in Bangladesh? Would that be correct?
Yes, sir, you could say that.
Okay, well, I just did say that. So Nezrul, just make it simple. What is the ideal scenario in your mind for this open account initiative of the central bank? What's your view?
If you look at the circular, actually, this circular is emphasize a model. The model is to support the Bangladeshi exporter with the anchor importer in major trading economics, as you mentioned in your introduction. Clearly enough, it will work best when the trading partners have actually doing some business for some time, build up a relationship, KYC and customer profile has evolved over a period of time. So this simply put that business continuity of the business model with this circular, having said that long-term relationship with them will be a win-win situation. So simply put, revolving limit could be put in place in a Bangladeshi banks to support their exporter, supported by a payment undertaking or payment discoveries from the abroad. But for export factoring is like the GRIF rule that as I mentioned that it will apply. You know, in the event of default of the importer, the due date in the definition of credit risk in a credit risk in a GRIF rule, Article 16 in particular, is become very important. But honestly speaking, basically it is not welcome by the trade finance community. Because of this, that trade finance community has whenever they talk about the maturity date, so this maturity date is fixed in their mind. But applying this Article 16 GRIF rule, actually, the fixed mindset was not there. So this particular is a cause of concern for us.
Okay, I'm not really exactly understand what you're saying about Article 16 of GRIF. Do you know what Article 16 of GRIF actually states?
Yes, the Article 16 is actually says that the credit risk is the risk that the debtor will fail to pay a receivable in full within 90 days of its due date, otherwise than by reason of a dispute. So word dispute is open the Pandora box. It's not actually fixed.
Okay, I'm with you now. 90 days after its due date and not covering contractual dispute. Yeah, very interesting. But that debate is for another day. Back to standbys. So my guess is, from what you said, you believe that this scenario, ongoing trade between the guys who know each other, is ideal for the standby now to stand by and stand up, covering the risk of default by the anchor buyers in, let's say, Europe or the US. So are you recommending a standby to fit here for the Bangladesh?
Not just any standby bin, actually. I recommend a standby subject to ISP 98. If I can explain.
Nesser, you can't explain. I mean, you can, but not right now. We'll come back to you maybe a little bit later, because time is just running on. So, Ashish, moving to you, and we'll get back to you later, Nesser. Ashish, you are, I know from talking to you, a great believer in the untapped potential for standbys to facilitate trade between emerging, developing economies. Can you tell us why?
Many reasons, some obvious, some may not be so obvious. At the opening session today itself, you said that is the brave new world of global trade. You had some interesting figures for all of us. Global trade dropping by 8 to 10% in, I think, 2020. Add to that, that SWIFT trade messaging has dropped by about 12%. But interestingly, the trade facilitation programs of the multilateral development banks, the MDBs, IIBRD, ADB, IFC, have had their largest growth in volumes and values in their history, and is still increasing. So, Mr. Vincent, can I in turn therefore ask you a question? What is the foundation trade product used by these MDBs themselves to support the emerging market trade? What is it that they issue? Yeah, I'm going to tell you, but I'm sure you already know it is in fact the standby letter of credit.
Okay.
So yeah. I believe strongly in the advancement of standby letters of credit, and I agree with Nasrul, preferably SBLCs. I'm going to use standby and SBLC interchangeably. Issued subject to ISP 98 can facilitate ongoing as well as new trades from emerging markets. If I may at this point just defer for a moment to respond to Nasrul's question on export factoring in India, I think it's possible to conclude that 80% of such factoring is actually done on recourse basis in India.
Okay, so with recourse basis. So thanks for clarification. But getting back, can you be a bit more detailed on how this standby model can facilitate such exports and trade with the emerging markets? A bit more detail.
Okay. Allow me to pick up again, if I may, on Nasrul's scenario and the regulatory development in Bangladesh regarding open trades. I think you set the scene very nicely. With ongoing trading partners who will work together over a period of time, the KYC and compliance are not such a big deal. They are important in today's day and age, but they should be easier to manage. The role of traditional trade documents such as the original bills of trading are not so important for ongoing repeat buyer-seller trades. So for these ongoing repeat trades, the Importers Bank could issue, let's say, an annual 360-day SBLC covering all or part of the payments due to the exporter, for the supplies made, say, from Bangladesh. So with the standby in place, the Exporters Bank in Bangladesh takes the default risk based on a payment undertaking, which is the standby, and can provide funding to the exporter, like Nasrul mentioned, through a revolving credit line, and it can be both for pre-shipment and post-shipment finance. Of course, the icing on the cake would be if MDB could provide low-cost dollar-based funding to the banks in the exporter's domain, and let's say the risk assumed by the Exporters Bank based on the security of the standing by to cover an event of default.
Yeah, that sounds good to me, Ashish. It's not completely new idea, but it's a very good idea. But why are you saying dollar-based? Does it really matter? Couldn't it be Bangladesh?
Yeah, we are just discussing, we've been discussing Bangladesh as an example here, a case study if you like. So the ready-made garments exports, which are huge from Bangladesh, I think are usually invoiced in US dollars. So with USD funding, it's a situation of dollars in, dollars out. I would imagine the foreign exchange risk could be mitigated with appropriate hedging policies. But more crucially, the dollar-based funding would be available to exporters in Bangladesh at a lower cost of finance than is probably available in their local currency, Taka. I hope you got it, Mr. Vincent.
I've got it. Please go ahead with the structure, please. Okay. Yeah.
So the structure would deliver on the requirements of the Bangladesh Bank Central Circular on payment undertaking, non-recourse finance. It can be very nicely synchronized. In my opinion, it would. Furthermore, as we all know, most standbys expire unutilized without any presentation. So this could lend itself to establishment of a digital ecosystem based on SBLCs. Such a digital solution would also, I think, operate better with standbys issued subject to ISP 98 rules. Hope finally you are convinced, Mr. Vincent.
No, Ashish, I am not 100% convinced, just maybe 99% convinced. Okay, certainly interesting. As I said, not completely new, but linking the regulatory change in Bangladesh, the largest traditional import LC issuer, this could indeed, you're beginning to convince me, be a tipping point for the standby LC to significantly disrupt the traditional LC model. We have kept the best till last. So, Anna, over to you. Time for the standby to stand up, and if yes, why?
Well, I think Vin, Nessar, and Ashish have been 100% convincing. Don't you agree?
Yeah, well, I agree, but you're not getting away that easy, okay? If I can remind you, in the past, we'd have had a conversation, and I've often heard you comment that as a beneficiary, you yourself, with all your experience, would prefer a standby LC to a guarantee covering ongoing exposures. Why, if I may ask you? Why standby instead of a guarantee?
Okay, let's take it up from here. So you're taking me a little bit out of the context, but as we all know, the wording or written terms and the conditions of the guarantee, as well as the standby LC, is the #1 priority to get them right. Okay. Do you agree?
Agree. Yeah.
So as a general statement and as a practitioner, I feel that the standby, as it has evolved over the time, is much more preferable instrument than a traditional guarantee in the hands of the beneficiary, because you asked from the beneficiaries. There are a few reasons why, and let me summarize these reasons. From my experience, standby wording tends to be more clear, shorter, and more precise. And precision is the paramount important in the trade finance businesses. We all know and have heard from you many times that. And also, we've seen many legal cases in many jurisdictions surrounding guarantees, and people and the lawyers spend so much time determining if the guarantee is a primary obligation or a secondary obligation. And this is all based on the wording of the guarantees. It happens very seldomly with the standbys, and to my knowledge has never happened to the standby which were subject to the ISP 98.
I strongly agree with you, but of course, taking into your point, into my mind, your first point regarding the terms and condition. But just to wrap this up fairly quickly, my friend Ashish, who I greatly value, but I always see him as a traditional trade guy, okay? And he said something I didn't expect. He mentioned digitalization, okay? So for such a traditional trade guy, he mentioned the standby model with ISP 98 can lend itself to digitalization platform for standbys. So what do you make of this revelation of Ashish, which is surprising to me?
You know, it makes a lot of sense. Of course, that digitalization is the one of the priorities for the trade finance business nowadays. Let me just summarize quickly here as well that the commercial LCs, so many parties and so many documents on different standards, and most commercial LCs always involve the presentation of documents. That's the structure of the commercial LC. And as Ashish mentioned, most but not all standbys are issued and expire, and they are issued and expire unutilized without any presentation. And that's the structure of it, right? So if you ask me about digitalization or electronization, which you have also mentioned, electronic issuance and the occasional presentations by electronic means is rarely not new for the ISP 90. Despite that the EUCP electronic presentations under the EUCP still remain very, very rare in the experience and in the practice.
I won't argue with you. But listen, getting back to basics, a standby is a standby, UCP, ISP 98. So why are you so strongly saying ISP 98? Or should I say ISP 98 is more digital or electronic friendly than UCP, for example? That's the question, okay?
You know, again, back to where I started from, the simplicity and clarity is what I am leaning towards to. You know me for a long time, and you know that first I will admit it now, I think it's the first time I'm admitting that when I encountered with the ISP 98, I found it took me quite a while to get familiar and to get comfortable with the rules, because I was not that convinced by that time. And probably that was a lack of the practical experience as well. And now I can confirm that I find that the ISP 98 definition of documents, as it covers the paper and electronic, and focus on the essential ingredient for the examination under the LC of being capable of being examined for compliance, are drafted with a very, very precise and very clear wording. And this, I think that the COVID-19 and all this, the demand on the electronization and digitalization showed the perfection of the ISP 98 in this regard.
Our colleagues earlier were talking about authentication, etc. So sorry to put you on the spot, but can you give me any example in particular why you see ISP 98 wording or definitions so precise and clear as you just said?
You know, I hope I get it right, but I think it's a rule 109C in the ISP 98, but it precisely covers within this rule the electronic presentation, what is meant by electronic record to authenticate, and also with regards to the electronic signature.
Okay, Anna, congratulations. You got it. You got the right number. But I still think you can also achieve this with UCP, to be honest, if one really knows what they're doing applying the UCP.
Yeah, I completely agree with you. If you really know what you're doing, that's a very key and essential point. And no objections with regards to the UCP or EUCP, but when you ask me to compare from the beneficiary's point of view, that's a different story. And from the digitalization, which ISP 98, I think, was ready for that as well. by its simplicity. And I just wanted to mention that I remember from Jakarta ICC Banking Commission meeting. It was, I think, IIBLP meeting, when Professor Byrne mentioned something which I remembered quite well. So better complex, precise rules for simple standbys than simple rules that for complex standbys. I know it sounds complex, but it is very, very important.
Yeah, all of us here, all of us here have heard Jim say those words, and like you, it took me a while to actually believe him, and not that I doubted him, but to understand it. And I'm fully aligned.
If we get back to the where we started, Vin, with regards to the beneficiary, with the presentation, beneficiary has its own requirements. Whether it is a paper or electronic. Okay. It is a clarity and simplicity, both in the transaction wording and with regards to the respective rules. And this is a mission critical for the presenter, and the presenter is the beneficiary. They don't want to end up in the court.
Okay, so the bottom line is ISP 98 for standby. So Anna, we're just running out of time. Just to say to everyone, we had a great session. My three colleagues.
If I may just add.
Sure, sure.
So the scenario on SBLCs has been so well explained by my colleagues here. It works very well for trade flows from developing to developed countries, say for example, from Bangladesh or India to USA. However, the model can work very well for South-South trade amongst the developing countries based on SBLCs issued subject to ISP 98. The development banks like ADB could then step in, covering issuing bank risk and or refinancing.
Yeah, that's a very interesting point, because I keep thinking Bangladesh to the US or whatever. But of course, you're right. If the development banks are covering issuing bank risk in other regional countries in Southeast Asia, I've never thought of this angle before. But yeah, this is worth looking at further. We are just running out of time. So I'm just going to say to my panelists, to Nesrul from Bangladesh, and we look forward to hearing more about the with recourse and without recourse at another date, to Anna from Georgia and Ashish from India. Thank you very, very much. You have me totally convinced. I really believe that it is now the time for standbys to stand up. And your ideas on the digitalization were great. So with that, Michael, I think I can hand back to you.
Thank you for having us.
Of course. No, thank you all for this. This was a great panel, and these are the kind of panels that we want to close the day on as well, because it's really great food for thought. And in fact, Ashish, you actually beat me to something I was going to ask Vin, which is along the same lines. Is there a mechanism that might help cover some of the risks, some of the cash flow from some of these, the development banks? And that's maybe something we should pick up at a future conference, at a future event, and see if there's a process for that.
Yes, Michael, I think you're absolutely right. I think we've opened up a new chapter in the book, or we have revisited an old chapter in the book, which we are now going to digitalize.
Perfect. Perfectly said. Excellent.